The first section that we're going to look at is the purpose of accounting for long-term assets. Now, we can summarize the purpose of accounting for long-term assets with the following. First, we have to record the cost of the asset, obviously. Now, we may have purchased the asset or we may have constructed the asset, for example, a building. But in any case, that initial cost has got to be recorded in the books. Secondly, the asset, typically, if it's a long-term asset, is used up over time. And we have to record this. For the tangible items, this is going to be called depreciation. For the intangible assets, this will be called amortization. And then for natural resources, it's called depletion. Now, it is very atypical to have a long-term asset that does not get used up at all, although there are exceptions such as land and then an item called goodwill that we'll look at later. Now here is where long-term assets show up on the balance sheet. They're of course in the assets section, and they're typically recorded at the very bottom. And we start off with fixed assets. This could be called property, plant, and equipment. It could be called plant assets. For intangible assets, what we may see is just the name of the asset itself. So we could see patents, for example, there. And then for natural resources, the same thing. We may just see the name of the asset. So it could be a gold mine, and we may just see that name there.